We are going to do the second section, section 1, second topic, which is the accounting equation. So what is accounting equation? We have to know, we have to learn what is the asset, liability, the three term, asset, liability, owner equity. Owner equity, another word we call, another term similar to it, we call capital, which is the owner equity. How we applying these three terms to get the accounting equation? I will show you the relationship between these three terms and the equation that we can get. So the basic accounting equation is asset equal liability plus owner equity. Owner equity, as I say, is a capital. Owner equity also can be asset minus liability. Okay, let's move on. What is the asset? Asset is the item owned by the business or owned by us or owed to the business. For example, customer owing us money. Customer in accounting, we call trade receivable. So trade receivable is our asset because we can chase money. Next is that asset also is bought to held by the business to use in generating the income. What is held by? Like example, your car. Your car you buy is not intended to sell in order for you to use it in the business to generate the income. So that is one of the example. Car, motor vehicle is an asset. In asset, we differentiate between the three categories here. Non-current asset. Non-current asset is the asset that can be used for the long term, which long term in accounting means more than a year. We buy is intend to use in the business in order to generate the income, not intend to sell. Example that you can use for the non-current asset: land, building, motor vehicle, furniture, machinery. Current asset. Current asset is a short term. Short term means less than a year. We intend to have it, and then after that we sell it in order to get the income. For example, your inventory. Inventory is your stock that you buy, your goods that you buy, you intend to sell to get the money in. Trade receivable is the customer. Other receivable is the some expenses that you pay in advance, which is not yet utilized. That is called other receivable. Bank and cash. In the asset, we differentiate with the tangible and intangible asset. Tangible asset is the asset have physical presence, such as building, inventory, and cash. It means that physically we can see it using our eye. We can see, we can touch. That's called physical. Intangible asset. Intangible asset is the asset do not have physical presence but has the value to the business, such as goodwill, trademark, patents, technology. In the IGCSE syllabus, we only concentrate with the goodwill. Okay, let's move on. Okay, you can test yourself. What have you learned? Okay, liability. Liability is the debt owed by business to the external party. External party means that is the outsider, which is economy obligation payable to outside. Economy obligation means that something that it will affect your business or other party business, which is we have to pay. Obligation means you have to pay. Liability have two types: non-current liability, current liability. Non-current liability is a long-term debt which is more than a year. External borrowing fund, which is you borrow from outsider. For example, you borrow from the bank. So example of the account that we need to learn, for example, bank loan, debenture, or mortgage. Okay, So there's an example for the non-current liability. Current liability is a short term. Short term in accounting we refer to less than a year. For example, the current liability, we have bank overdraft, trade payable, other payable. Trade payable is our supplier. In our business, we call supplier. Other payable is the expenses that we use, but we didn't pay the money to the outsider yet. That is called other payable. It's not related to the goods. This is related to the goods that we buy and intend to sell. Owner capital, owner equity or capital. Item or money invested into the business by the owner. Like example, you bring in your car, your shop lot, in order to do the business, that is called item. Money means that the real money that you take it into the business to use in the business. Residual claim on the total asset, which means that asset minus liability, the balance is the capital. That is under accounting equation. Okay. Next. Profit retained in the business. Along the way, a year, you run the business, make a profit. This profit will increase the capital. How each affect each other? In account, when we prepare the T account, in T account, this account A, debit is in here, credit is in here. In account point of view, when I say debit, means that this account, A account, receiving, which can be receiving the goods or receiving the money. Credit is giving out, I mean, this account giving out something, whether it's the item or the money. From the accounting equation point of view, if this account is an asset account, for example, bank account. Bank account is an asset. When it's a debit, bank will be increased. When it's a credit, bank will decrease. So bank receive money will increase, giving out money will decrease the bank amount. Whereas liability and capital is opposite, is another way. Debit is decrease, credit is increase. So take notes that asset, debit increase, credit decrease. Liability or capital is debit decrease, credit increase. Next is, in this chapter, you need to know the basic statement of financial position. What is a statement of financial position? Statement of financial position is a statement to show the asset, to show the liability, to show the capital at a particular date. For example, 31st December 2020. So this is the date that we are referring only for this date, not others. In statement of financial position, there are 5 sections that we need to take notes. Non-current asset, current asset, capital, non-current liability, current liability. This is a 5 key section for the statement of financial position. In this individual section, there are the accounts sitting into here. For example, non-current asset, we can have land and building. We can have furniture and fitting. We can have motor vehicle and so on. There are more other items in the non-current asset. For the current asset, the account that we have, trade receivable, inventory, something belong to us, that is called asset. Bank, cash, So this is some example for the current asset. For capital, we have the component for the opening capital. If you have profit, you plus. If you have the losses, you minus. And drawing, this drawing is referred to the money or the item that we take for the personal use. Personal use means it will reduce the capital amount. So these three components sitting under the capital section. Non-current liability in our syllabus, bank loan. Bank loan is more than 1 year, then is considered non-current. Or debenture. Okay. Current liability, we have trade payable, which is supplier. Other payable, if we have the bank overdraft differences with the bank is money belong to us. Bank overdraft means that we use bank money, we owing bank money. So that is a liability. So this is a 5 component or 5 section that you need to memorize for the statement of financial position. So basically, we have gone through the chapter. For more detail, refer to the exercise that I record and try to practice yourself. So see you